A Center for Risk Analysis says conditions at local ports are costing Transnet and the economy billions due to years of neglect and a fall in productivity. The mineral sector illustrates the case more vividly, with production now at the same low levels as during the harsh COVID-19 lockdown in 2020. The center adds that the Durban, Cape Town ports are now among the 10 weakest in the world. Joining us to share how the situation can be addressed spectrally is a senior policy analyst at the Center for Risk Analysis, Hattingh. Chris, good evening. Good to have you with us tonight out in Focus. We hear of how ports have been neglected and how ports are not doing what they are supposed to be doing. How bad is the situation? Just explain to South Africa, when compared to the 10 others that are way ahead of us, what they are doing and compared to what we are doing.
Good evening, Thabo, and to the viewers. Thanks for having me on to discuss this very important topic. And at the time when the world is seeing rising commodity prices, South Africa has done relatively well with our commodity exports, but not as well as we could have been. So the fiscus could have been in a stronger position. Perhaps welfare programs could have been funded better. The sort of low-hanging fruit of government assistance could have been funded if the commodities boom had been exploited to the extent that it should have been, if the basic infrastructure was correct. So this recent analysis and research comes based from the World Bank and S&P's latest World Bank, Container Port Performance Index. And this ranks 370 facilities around the world. And unfortunately, South Africa's ports, especially Cape Town and Durban, are in the bottom part. The last two are Los Angeles and Long Beach. So maybe not bad company to be in, but not the right metric on which to be. And the data is from 2021. So as we saw ups and downs in supply chains, more pressure, that's why ports were under more pressure throughout last year. This year we have increased lockdowns in China. We also have the war in Ukraine. These will again have ripple effects across supply chains. With South African ports specifically, we have the issue of digitalization, which is behind the curve. We also have problems around PO capability and simply tracking containers and goods coming into the country and also going out. It's not, there isn't a lot of sort of fancy footwork and things like that to try and solve. It's simply getting the basics right. And from that, we would see the downstream benefits.
Yeah. The failure then to have our ports working accordingly, how would that impact, for example, on our roads and the traffic that we're going to see and the kind of movement? Because business have got to get these things moving somehow.
No, absolutely. I think you're exactly on point. Of course, when companies, exporters, importers can't rely on rail and ports, they need to move their freight onto roads, and then we see the roads deteriorating. And you also see increased risks in terms of security and safety. Perhaps moving your goods across trucks in that form of freight means better opportunities for criminal syndicates to exploit those. So then you have a higher premium on transporting your goods, which again factors into higher business operation costs, and those are passed downstream onto consumers. We expect inflation to keep rising throughout this year and next. Look at what the US Fed might announce this coming week with their interest rates. That'll be a good indicator. And with increasing inflation, you have difficulties around doing business, and you have high fuel and food costs, which unfortunately means more pressure on low to middle income South African consumers who are already under a lot of pressure. Their money doesn't go nearly as far as it used to. So where are they going to have to cut and try and find perhaps cheaper ways to feed themselves and their families if they can't access the goods and the products that they used to, because simply things don't move around as well as they could have in the past.
Now, the Department of Trade and Industry has revealed that at least 826 companies were affected here by the recent floods at a cost of about 7 billion rands. What role did those floods actually play in the kind of, I suppose, exacerbated situation that is happening there in the Durban ports?
No, of course, and it was a completely unforeseen circumstance which happened, but then one perhaps should ask the question, what could have been done to ensure that the infrastructure was better maintained or upgraded to prepare accordingly for these sorts of unforeseen natural events? No government can prepare for everything, but it could do the simple things right to ensure that some of the damage is at least mitigated. Durban is incredibly important, not just for South Africa, but sub-Saharan Africa. And now if it'll take longer to clear backlogs, to ensure that that infrastructure is clear as it should be, as avenues and blockades are cleared. Maybe other countries either wanting to get our commodities or wanting to import into the country are going to look at ports such as Walvis Bay or Maputo, and those governments are going to reap the benefits therefrom. Again, this will also impact on businesses in the Durban area. So at the moment, I would argue that instead of maybe focusing on sort of high-level localization master plans, it's better to focus on just getting simple port operations right. Then you're going to see a much more inclusive and growing trade space, which will just mean more job creation and investment, hopefully, down the line.
Yeah. What does the term port reform mean to you? What would need to change?
I think it's as simple as perhaps looking at what role the local municipal and city governments can play. So in Cape Town, for example, or in Durban, what knowledge do those politicians, bureaucrats, government officials on the ground, what knowledge do they have that would be better suited? And if they're given more control and power, then perhaps trying to dictate policy maybe from Bloemfontein or from Pretoria, and deciding that each port should operate in the same sort of manner and on the same footing. It's as simple as perhaps just devolving some of that power to the local municipalities and city councils, but also just steps in terms of digitalization, making sure that the port authorities can track containers and goods coming in, know what should have priority and what shouldn't, at least know how long a container ship will wait in a queue. For example, the index that I've referred to earlier is based on the total time it takes to unload a standard container. So just looking at those small steps that you can take to ensure that containers are unloaded and moved out of ports faster so that the container ships can keep moving and those costs can decrease. And then finally, a simple, I would argue, reform would be looking at what can port authorities do to make sure that current infrastructure is at least maintained to a satisfactory level. So don't, for example, think that Durban Harbour should be expanded 10 times exponentially. That would be ideal down the line. Of course, we want to have those facilities. Yeah. But just focus on securing what resources and facilities you have right now, and that you match international standards to a satisfactory extent. Because if we don't, it's as simple as shipping companies and businesses, exporters, importers, they're going to look at where their profits are going, and they're going to find other avenues to move their goods into the African continent.
Now, it's exactly on those 2 points, the introduction of technology, but also the maintenance of infrastructure, where to many, when they hear the word, the term port reform, they think of changing the ownership structure of ports to bringing in private sector in the exploitation and the financing of port facilities. What's your view on that? There are those who are saying, well, that's more towards the line of privatization, which they are strongly opposed to.
And I think there are legitimate concerns with privatization. One should perhaps worry about the way in which such evolves. Privatization, qua privatization, doesn't mean it's done in the best way to benefit everyone in supply chains if it's not done with the correct sort of requirements and demands. I mean, I would argue that the Transnet Ports Authority, one could make a case that once it is spun off completely from Transnet and one realizes that the board is independent, that it's making the necessary, if be it difficult decisions, it should retain ownership perhaps of our port authorities, but then give private investors and skills developers, capital investors, give them a longer lead time for investing, because that's serious capital outlay. So you have to give an incentive for them to take on those risks so that they know if they invest in an entity owned by Transnet, for example, that their investments will be secure over the long term. At the moment, we have the pilot project with the railways and 16 corridors, but that's only for a period of 2 years, and Transnet remains the ultimate owner of infrastructure. Now, I don't know about that incentive, and if you're incentivizing that capital outlay or not, you need to make it as attractive as possible, because again, government will bear the fruits, and businesses and ultimately consumers and job seekers will hopefully bear the fruits if it's done in a correct and transparent way. At the moment, I think we're very excited about the commodities boom, and the country talks about it a lot, and we're lucky that global events are in our favor. But we need to put the steps in place now to upgrade our infrastructure so that it doesn't matter what happens with global events, that we're always on a strong trade footing.
Chris Hattingh, appreciate your time. Thanks for coming on, Senior Policy Analyst at the Center for Risk Analysis.